Right. Hello? What's that? You're from Time magazine, you say? Uh-huh. Elon Musk has declined his Man of the Year award, and you'd like to give it to me instead? Well, naturally, I'd be...
Yeah.
Hang on a minute. Hang on a minute. Is this another prank call? That's the 16th one I've had this week. Listen, if you don't stop, I'm going to report you. All right. Oh, okay. All right. All right. Bye, Mum. Love you too. Welcome to the Crypto Culture Show. With Christmas just round the corner, we've got a sack full of festive crypto goodies for you to unwrap. Joining me today, my festive helpers are our very own John Ho-Ho-Do from Canada. John, how you doing?
I am good, Tom. How's it going with you?
Very well, thank you, sir. Good to see you again. And here in London, this week's Crypto God of the Week is NFT and fashion entrepreneur Nick Stickland. Nick, great to have you on the show.
Thanks for having me, boys.
Right, we are going to kick things off straight away with all the news from round the crypto sphere. Here are the headlines. Up first is our man Elon, who, as well as accepting Time Magazine's Person of the Year award, also had time to tweet that Tesla were now accepting Doge for merchandise and making sure he sounded down with the kids and not too fussed about how it turned out. He tweeted, Tesla will make some merch buyable with Doge and see how it goes. Doge pumped 30% instantly on this news, and we will indeed see how this goes. Guys, either of you got any Doge that you're going to buy Tesla merch with?
It's bullish in the moment, but I don't think it's that useful to buy merch using Doge.
What about you, Nick?
I dodged the Doge, to be honest with you. I'm just watching carefully from the corners of this screen as it moves.
Good stuff. Our second headline, Nick, talk me through what you've seen this week that has jumped out.
It's hard to miss, really, but I think what's been fascinating is to see just another example of the fashion industry pouring money into blockchain. Really, Nike's purchase of Artifact was really encouraging, actually, and it's something that we've all in the kind of creative industry has been watching for a while. But it's so lovely to see the kind of NFT market and the applied use of virtual clothing, etc., growing and catching fire in the mainstream. I think we're going to see lots more of it soon.
We've got a clip as well, was posted on social media that you can see here. We've sort of got an augmented reality clip with what looks to me like real world shoe wear with virtual shoe wear being cycled through, with half avatar, half human stood holding it. John, what have you seen this week?
We did have one of the biggest crypto funding rounds in history, and that is from NYDIG. They raised about valued at about $7 billion. They raised $1 billion in their first round, and they are pretty much an institutional broker for Bitcoin. That means we will be connecting banks with people, so that way people don't have to make accounts on exchanges. They can just buy Bitcoin or crypto right straight through their banks. And I think right now we're about to get into a race for Bitcoin between decentralized and traditional finance. There will be a race, people trying to buy Bitcoin up, and I think this just might be the beginning of that run towards 500,000 or even $1 million for Bitcoin.
Wow, big news, big news. And this is sort of the plumbing into what seems to be traditional finance markets that open up crypto to the masses. Very interesting to see what happens next there. Thank you very much for those headlines. Time now for some vital statistics. And before anyone gets body conscious, I'm talking graphs, charts, and markets. Okay, we are going to have a look on chain first before throwing over to John for technical analysis. And we will start with the derivatives. chart, the Bitcoin futures open interest after the large flash crash last week. The open interest market dropped and has come back up ever so slightly, as you can see on the right hand side of this chart. The main thing that is interesting on the open interest chart, however, is whenever we seem to go above 380,000 Bitcoin in terms of the value of open interest, it has historically pointed to a potentially more volatile market. So an interesting one to keep an eye on as this starts to bounce back. Second thing we'll look at this week is the Bitcoin balance on exchanges. Now, in the May-June crash, you can see in this graph that 168,000 Bitcoin were moved onto exchanges in preparation for selling. Now, the recent price drop has had something slightly different happen. And October to December, we now see that the balance on exchanges of Bitcoin has dropped. So what this tells us is more than likely right now there is buyer appetite for those who are selling Bitcoin, and that Bitcoin is being taken off exchanges into cold storage. Will this last? John, what do you think?
I think it's right now the way Bitcoin is staying, like leaving exchanges compared to what we had in May. It's actually really good. It means price is holding a new support level right now, and the whales or the large players aren't seeing any type of weakness. They're still looking to buy on all the dips and more support levels. And where we're sitting right now, just above 50, it looks like a spot where things just might reset and we might see a big player come in. All it takes right now is another big player to come in, some more Bitcoin to leave the exchanges, and we'll see it running up towards all-time highs.
Absolutely. And actually, interestingly, in our final chart, we have a quick look at the NUPL, the net unrealized profit or loss. And what this is showing us is the on paper gain or loss all Bitcoin holders are currently sitting in. So if I bought Bitcoin below the current price, I'm currently sitting in a paper gain. And if I bought it above the current price, I'm currently sitting in a paper loss. And this gives us a view on the market as a whole. Now, the interesting thing on this metric, if we look back through the previous cycles, is the tops of each of the cycles are indicated by this blue peak that you can see on the graph, and it's where the NUPL measure goes above 0.75%, so 75% or more of the Bitcoin network is sitting in profit, and really it's only the very latest entrants that are not in profit. More interestingly, we didn't break through that line as the Bitcoin price hit all-time highs recently.
If you look back towards 2013, you can see where Bitcoin, hold on, let me pull it up again. Yeah, if you look back in the previous trend, you can see Bitcoin, it had a double top in that range you're talking about.
Yeah.
And this time around, we didn't even test it one time. So I think it could be another blow off where it just hits it once, similar to 2017 and 2018. But if we do get that, I think we're going to go well past 70. But 100K, it all depends on how much institutional is coming in, because retail right now, they're going to be getting greedy if we get up towards 70. But anything above that, yeah, that's where we start getting to a whole new threshold.
Great point. John, what are you seeing in the charts at the moment? Talk us through what's going on.
So now we just had a look at on-chain. Now we're going to use some technical analysis. I'm going to pull up first. First, we'll have a look at the weekly chart for Bitcoin. And I'm actually going to compare some things you showed here on the Bitcoin weekly chart, on the TA chart. And then also I'll look at the daily, the 4-hour, and give our current outlook right now in terms of a trend, momentum, and also trade setups. Right here, as you can see, 5 weeks now, Bitcoin has been in a downtrend. And back in history, the only time this has happened was back here in 2017, 2018, where we had that insane bull run, and Bitcoin went in that similar pattern, 5-week downtrend. But one thing that was not good is it went into a long-term bear market consolidation range before breaking into new all-time highs. So a similar pattern now, we could have that happen, but things are looking a little bit better since we have much more adoption, and price is sitting at that 50 moving average support level here on the weekly, and this is 3 times now it has held off that range. Now here on the daily price chart, if you look at Bitcoin, some more things that make you feel a little bit better is it's sitting right on that 200-day moving average. If you look back in September, we had a very similar price pattern happen where we broke down that first leg and then consolidated for a few days, and then finally broke out. And that's exactly, if you compare, that's exactly what happened here. We broke down this first range, and we're sitting on that 200-day moving average, consolidating sideways, and now we are looking for that breakout. And if you look at the RSI as well, that is having a bullish divergence, and as well as the MACD is anticipating a bullish crossover. Now, if you look back in May, it was similar as well, but price was below that 200-day moving average, and things just got dragged out a little bit more. It didn't make a new low. It did hold off the lows and then ran up. So I think as long as we're above 40K, things are looking good for Bitcoin. And then here on the 4-hour chart, in terms of short-term momentum, you can see it's holding off support, and I'm still expecting that next push towards up here at this 55K range. So from this current range we're at right now, to the downside we have about a 6% risk, but to the upside it is about a 14% reward on that to that next major resistance. And that's all I got for now.
Thanks, John. Now, to its true believers, cryptocurrency is a veritable religion. So fittingly, it's time for this week's Crypto God. This week's Crypto God is NFT and fashion entrepreneur Nick Stickland. Welcome to the show, Nick. How are you, sir?
Very well. Thanks for having me, Tom.
It's a pleasure. It's great to have you on. Now, I know everyone's got a story of how they got into crypto. What's yours?
My story, when I first kind of learned about this crazy world, was on a journey to New York. And I remember traveling with a business partner who was explaining to me that he just bought something called Bitcoin. And I just couldn't get my head around it. But I decided to buy it because we were delayed. And then we were delayed and delayed again. And I bought more and more as I was in the departure lounge. And as I was starting to kind of dread the moves and hate Virgin Atlantic more than ever before, by the time we landed in New York, I couldn't have been more proud of Richard Branson and his team for the money that I'd made as we'd flown over the pond. It was extraordinary. And I think from that point, I realized how fast-moving and wild this kind of West was, and the rest is history, really. I was kind of hooked, and I couldn't stop looking at the phone. On a daily basis, it became a total and utter addiction. We held crypto parties. We just fell completely into the hole.
Love it. That's a great story. Everybody's got their own story of how they got into it. I love that one. And now you've set up a company called Upstrm, which seems to be combining sort of real world fashion with NFTs. How does it work? Tell us a bit more about it.
So the human truth, the insight really was that, we've designed Upstrm for the TikTok generation, and it's probably true now more than ever before that how you look on screen, on social, in game has never been more important. And it's the evolution of vanity, really. And I suppose what Upstrm is, in a nutshell, is a platform that gives Gen Z access to clothes that they couldn't otherwise either A, afford, or B, get hold of. Drop culture, almost parallel to NFT drop culture in fashion, are so similar now that what we've done is we've built a very simple piece of mobile tech that brings sought after pieces to your home in the physical world. And also V2 will be looking at how we have clones of those items as NFTs brought to you in your metaverse virtual world. So you can cross from the real to the virtual wearing exactly the same thing.
Really interesting. It feels like you're right at the intersection of two worlds colliding right now, with a lot of potential and interest behind it. And we've got a clip, actually. Let's have a quick look at one of your reels. Talk us through what's happening here.
So what you're seeing here is the very simple interface UI that we've built. The user interface is designed really on short form vertical video. And as you see, I'm landing here on a product. I can swipe to see other inspiring videos behind that helps incite the borrowing of that product. I click on it. I look at the shots of the item itself. I choose either same day or next day delivery, order. and done. And that booking is as fast as ordering a pizza, and it's all based on very close proximity streams, not dissimilar to Deliveroo or Uber. You'd never order a Chinese takeaway, let's say, from Manchester if you lived in southwest London. And so all of these clothes are residing and sitting in cleaning partners and delivered by sustainable push bike delivery in close proximity, ring-fenced areas, local communities of fashion hubs, really.
Very nice. And obviously you mentioned the news earlier about Nike, getting in on the action and acquiring I've forgotten the name of them now. Artifact, that's it. So where is all this leading? What's your view?
Well, as you can see, that the virtual fashion market is itching to grow, and I think it just, through the very nature of innovation of this particular space, fashion has always been on the forefront of creative exploration. And I think NFTs are perfectly poised because they're the first real example of how the blockchain has been able to manifest into something that, albeit digital, is physical, is tangible. We're seeing holographic pieces of art trading at 6 to 7 figures and beyond. And I suppose as fashion does its best to revolutionize an industry that is in part broken, I think it will help lead the way that we present ourselves in the new world that Zuck and Co are trying to build. In itself, it's quite Romanesque. I suppose things like one-off experiences, concerts, unique gaming interactions that we might have seen otherwise in real life are now starting to happen in the virtual worlds, and will need to be dressed for the occasion.
Yeah, definitely. We've seen the huge appetite for gamers buying skins or clothing in game, but NFTs, I guess, do they provide a way to own these sort of assets, these fashion assets that are then broken out of a silo, broken out of a game, and being able to use sort of in multiple places?
Yeah, I think we saw this with the music industry, that the big labels missed an opportunity really to create their own Spotifys because they were unable to play together. And I suppose that's going to be telling as to whether or not the gaming companies can create worlds that are cross-platform and interoperable. If that's the case, then we will see NFTs that can cross virtual boundaries and be used in various different branded worlds as a kind of single wearable digital currency in a way, albeit powered by various different tokens. But I think when we talk about the opportunities with NFT, at Upstream, what we're trying to do is democratize the NFT landscape, which currently really, as it's so fast growing, is again only really accessible for those with Ether or with fiat currency that can be exchanged for NFTs. And I suppose what we're trying to do is reward loyalty, given that Upstream is powered through subscription. For every month that you're an Upstream user, we reward our community with unique NFTs that they can collect, and hopefully using green and sustainable cryptocurrency, we can give them something of value over the long term.
Yeah, very, very good. And just finally, you own a fashion brand. What are you going to be wearing in the metaverse?
I'd like to think exactly the same thing as I'm wearing today. Not that it's a uniform, but our costumes should really be able to transcend, physical to virtual. But who knows? Who knows? Maybe my colors will even be that much bigger in the virtual world.
I thought that was CGI'd already, that collar, but I mean, it's real. Thank you very much, Nick. Pleasure to talk to you, and we appreciate your time and input. Now, cryptocurrencies are like celebrity influencers. A new one seems to spring up every minute, and the thousands of them all claiming to be the most important. On this show, we'll help you get to grips with a different one each week. This week's coin of the week is Cardano. It was named after 16th century polymath, Italian polymath, Girolamo Cardano, and the coin is named after Ada Lovelace, the British mathematician and writer who was one of the leading figures in computer thinking and science. Now, as a blockchain, it can currently process 250 transactions a second, compared to something like Visa that does 1,700 transactions a second. But with an upgrade on the horizon, Hydra is looking to improve and scale Cardano to being able to process over 1 million transactions a second, which would make it one of, if not the fastest blockchain on the planet. Now, it's a little bit marmite in terms of views around Cardano. It's got a very, very engaged community and an interesting head in Charles Hodgkinson. Guys, what are your views on Cardano and where do you stand on it? John, let's start with you.
So I mostly look at price action, the price charts for Cardano, and I do know a lot of it does get news driven. So it is right now, as you mentioned, there's an upgrade coming. So as that there's anticipation for that, we should expect to see the price increase to head back towards September's high, where we did have that previous upgrade. What was the name of that one again? Alonzo, I think it was. So we had that upgrade happen, and the price went on quite a bit of a run leading up to that. So I think with this Hydra upgrade, anticipation for that, we will still see speculation continue to grow for Cardano.
Very good. Nick, you into Cardano? Is it a coin that attracted your attention?
100%. We are loving Cardano. In fact, funny enough, it was one of the coins that slipped into my wallet when I was in that initial departure lounge. But I think it's a good coin, and it's an oldie, but a real goodie. And I think, albeit a vintage purchase, if you like, I think actually the backdrop narrative to Cardano, when you read it and when you listen to the things that it's trying to do, it can only be a good thing. At least want to be. And I think if it can continue and manifest some of its promises, thumbs up to Cardano.
Yeah, thank you, guys. Now, if cryptocurrency is super currency, then fear, uncertainty, and doubt, or FUD, is the crypto knight against it. It's time for this. This week's FUD Master General is the Bank of England Deputy Governor, Sir John Cunliffe, who has said on a BBC, and I just want to read you some of this, guys, just to get your thoughts. Fast-growing cryptocurrency assets could pose a danger to the established financial system. Correct? I think, isn't that what cryptocurrency is about? Some of the other things that the article goes on to say is that about 0.1% of UK households' wealth was in cryptocurrencies, and that was about 2.3 million people estimated to hold them, with an average amount of £300. They do say if their value fell sharply, it could have a knock-on effect, of course, and their price can vary quite considerably, and they could theoretically or practically drop to zero. Of course, any investment can theoretically or practically drop to zero. But what do you think about this?
I think if it does drop to zero, that is a great dip. I'll see that as very positive.
I'll be buying. Yeah, it's very weird that they would even say this, because didn't we just say earlier in the video NYDIG is onboarding traditional finance through banks to buy so people can buy crypto, and now this bank is saying cryptos are going to go to zero. So maybe it's just like some sort of disclaimer, because eventually they're more likely going to be offering Bitcoin to their clients, so they're going to have to.
Yeah, exactly. Maybe. I think you're right, John. It's pretty much the standardized disclaimer anybody, when talking about any financial investment, sort of has to say, in particular if you're, the Bank of England, and maybe as well. I think this this whole article and headline is a little bit around misdirection, because the article actually goes on to talk about inflation, and obviously in the UK that is now around 5%, which I think is probably going to have a bit more of a knock-on effect on household wealth than holding £300 worth of crypto. And I know in the States it's potentially a lot higher than that at the moment.
Mm-hmm.
It feels to me that like the institutional version of Musk-esque whaling. I mean, it's just PRable noise driving the price down, arguably. It's also kind of a backlash against, and perhaps a bitterness of not getting in early enough. But it's the old guard versus the new. It's being unable to accept the kind of the Wild West starting to grow up. And I almost think that there is just a kind of unreasonable logic, actually, that it doesn't seem to make any sense now that crypto and the blockchain seems to be maturing on a daily, weekly, monthly basis, and it's just going faster and growing stronger than ever before.
And I think the other thing is there's probably a gap in education and understanding, and with big bodies like the SEC or the UK equivalent trying to get their head around regulation, that is not an easy task, and they seem to be struggling with that at the moment.
Yeah, for sure.
I just want to say a big thank you to John and Nick for joining us this week. We will have more crypto catch up in 2022, where John will be back with us, and many, many more crypto gods as well. From all of us here, we wish you a happy holidays, and we will see you in 2022.